Morning, everybody. This is Greg Michalowski from FXDD, and this is a Friday, March 26, 2010, New York opening Forex report for FX Street. Let me remind everybody that trading Forex is risky and should only be done with risk capital and not change your lifestyle. Traders can lose all the risk capital trading Forex. FXDD does not guarantee any recommendations made within its commentary. Traders should make market assessments and take trading positions based on their own personal market analysis, risk tolerance, and financial condition. Indication care should be made to only use leverage which is congruent with your personal risk tolerance. Although care was taken in creating this report, FXC does not guarantee the accuracy of the information. While the euro rebounded here today in European trading and really global trading, the market has been trending to the upside, as you can see here on the hourly chart, and the market broke through this trend line that was this top side of this channel, connecting the lows here to the highs and taking the high from way back here, and we have now moved through 38.2% retracement of this last move down, which is from the high just a few days ago. In fact, the high for the week at 135.69 down to the low for the week at 132.72, and we are approaching key resistance at 134.21. 134.21 is where the 100-hour moving average is and where the 50% retracement of this week's range comes into play. So that'll be a key level for the euro too, and I expect that there would probably be sellers at that level as we head into the Friday close. Taking a look at the 5-minute chart, we have seen this trend type day to the upside, and trend days are usually characterized by a move through the 100-bar moving average. First of all, we saw this bottom here, the triple bottom here, at the which gave you a clue that the market was forming a bottom, gave buyers a little bit of an early opportunity to buy against a move to the below the 132.67. The next came to break through the 100-bar moving average. We went up and tested the 200-bar moving average. You can see 1, 2, or 3 times there, and then market moved through the 200 confirming moving average. The green line is always our 200 moving average, and it's our confirming moving average. This is our trigger, the 100-bar moving average. And when the market moved through these levels, we did have one correction that came down, tested our 100-bar moving average, typical in a trend type move to the upside, and that gave the buyers the courage to take the market even higher. And as you can see, we're trading near the highs for the day. Again, we do have resistance off the 134.21 level. That's a 100-hour moving average and 50% retracement. Let's go to the sterling versus US dollar, and this had a little bit more of a bumpy ride here as euro sterling was bought. That caused the pound to get hit during the middle of the day here. It is now kind of trying to rebound, but we have a choppy type session. So let's go to the 5-minute chart. You can see that this started off the same type way with a nice bottom forming here. Market moved through the 100-bar moving average, went up to test the 200, moved through the 200, came down to the 100 like we saw on the euro, but in this case the sterling got hit through the 100, through the 200, started using the 200 as support, and now we're back above, we moved above the 100 and now kind of waffling around the 100-bar moving average here at 148.62. We'll be watching this 148.62. We're watching 148.49 confirming the move to the downside, but you can see the sterling is more of a in a choppy session here versus the euro. So expect that type of action to continue as we head into the New York day. The dollar versus Swiss corrected down. We're now testing. We just tested key support down here at the 136.71 level. This low came in at 136.69. This low here that we just had came in at 106.69. I don't know if I said 106.69, 106.69. So that's key support. The market bounced up to the 80 level, but not out of the woods here. Triple bottom there. If we do break the 100-hour moving average, we could head down to this 38.2% retracement. What is that? That's let me go back here. That's of the move down from the March 2nd high to the March 17th low, the old 38.2% retracement, so that comes in at the 100, and also where the 100-hour moving average comes in at 106.51. It's going to be a key level on the downside. We bounced off that 69 level, currently trading at this level. It's a double bottom here, so if the market can sit there and hold above that level, then we may see a correction up to the 106.99, but it does seem well, we're against good support. That's all I can say. So it's a low risk opportunity for traders to come and take some profit against that level. We're going to have resistance against the 100 bar moving average on the 5-minute chart here at the 106.99 level. Dollar versus yen. The key thing, we broke above the 200-day moving average. That currently comes in at 91.54 here today. Taking a look at the hourly chart, the correction is correcting for some of yesterday's gains. We had the sharp gain 2 days ago, another gain yesterday, and now we're seeing a corrective move to the downside. Here you can see the kind of a wedge formation forming off of the hourly chart. Off the 5-minute chart, you can see the corrective phase here where the market's chopping back and forth. The market did correct a little bit more than 50% of the last two-day move to the upside here, so that is encouraging, but we are waffling around the 100 and 200 bar moving average here, giving no real indication of which way the market may want to move. But definitely from a hourly perspective, from a daily perspective, we made some big progress here in the dollar versus yen. And the fact that we're correcting here today, I'm not surprised, but we'll be watching this closely. The close yesterday, by the way, came in at the 92.72 level, so you may want to put in a line there at the 92.72 level. Remind yourself that if the market should get above that level here today, the market may get a little bit excited to the upside. So far we haven't really approached that during the London or New York session. Dollar Canada, of significance here, came down, tested the 100-hour moving average, moved higher. That 100-hour moving average comes in 102.05. Yesterday we checked the 200. The previous day we checked the 100. So these key moving averages are the market are paying attention to it. We do have volatile action, however, up and down action in the currency pairs. Take a look at the 5-minute chart. We did hold the 100-bar moving average, move below the 200 here, so use it as a ceiling here, and then the two moving averages and the price converge. This is what we call Three's Company. When you have Three's Company, two moving averages and the price converge, you look for a move. Why? Because if Three's Company, you got to get away from each other. So you see. The price is the one that's going to take the move, moves away from the two moving averages, and the market moves sharply higher. Nice trading opportunity there. Now the market came down, corrected toward our two moving averages at this point right here, and so we found the buyers against that level, and these two moving averages are going to be important going forward, as is the top on the top side for the dollar versus Canada. The key for the Aussie versus the US dollar here today is the 100-day moving average, and where we close the week, the 100-day moving average currently comes in at current levels, really, at 90.68. Current price is 96.72. So we are at key levels for the Aussie versus US dollar. If we can stay above that 68 level, then we have to get it through these two moving averages here on the 5-minute chart in order to give the market some breathing room to the upside and give them some confirmation to the further moves, gains to the upside. So watch these two moving averages in between the 80 and 85 level. If we get through those two levels, that would confirm the upside for the currency pair, and we should see further gains in the Aussie versus dollar as it likes to move higher. New Zealand versus dollar really quickly is in between our goalposts on a daily basis. The 200 the goalposts are defined by the 200-day moving average that comes in at 70.06, and the 100-day moving average that comes in currently at 71.44. If the market breaks either of these extremes, we should see either a directional move to the upside. If it breaks to the top side or the downside, breaks to the downside. In between, look for this continuation of this buying against the one and selling against the other. That's what we've seen over the last month or so in this currency pair, and I expect that to continue until the time when it breaks either to the upside or to the downside for the currency pair. That's my morning report for FX Street. Thank you very much. We'll talk to you later. Bye-bye.